There's just one more thing that needs to break for this market to get really hot and heavy to the downside, and that of course is semiconductors. The bears have an edge almost everywhere else in the market, we just need something to open that final floodgate. Now unfortunately for those bears, I just don't see negative catalysts. The latest news is that Meta is going to be buying millions of NVIDIA chips over multiple years for their data center build-out. Unless we get a new round of headlines about OpenAI concerns or demand actually drying up, I'm not sure if semis will break in a meaningful enough way to really crash the market here. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 3 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off tonight with a closer look at the SPY daily timescale, and what do we see here from a trend perspective? Well, as we know, we've been stuck in this balance range, and this is the range low, and of course this is the range high up here. Lo and behold, we bounced exactly off of the range low on the Tuesday morning session, and we find ourselves in the midpoint of the balance range today. You will note that the upper wick of today's daily bar is rejecting the daily 20 in orange and the daily 50 in blue, and we close right at the midpoint, which is the weekly inflection point that we've been talking about for a number of weeks now at 686. So really, on the daily chart, the trend is exactly neutral in the midpoint of the range, but the question I might start asking is it possible for this to develop as a lower high here at the midpoint of the range with this upper wick starting to signal a little bit of rejection? I think it's possible, but it's not required, right? The market could remain in balance if we get an open tomorrow morning over 686 and it holds. And actually, let's just drop it down to the hourly chart here. If we get an open over 686 and we hold in here, the bulls probably rejoice on a full balance range rotation on any kind of higher low here on the hourly chart over 689.75, retaking the daily 20 SMA. That's the orange moving average. Now, why would that be the case? Because the hourly trend has flipped back to up, right? You have lows. This is a potential higher low for now, and this is undoubtedly a higher high. If we consolidate over 686, then the bulls have the advantage there for an hourly higher low, and we look for trend continuation towards the top of the range. Now, as we know, when and if we make it up here, seeing that it is just a balance, I would be looking for fades up around that area, meaning that the market should produce maybe look above and fail. Let's actually come in with the arrow crayon here. Something like this, look above and fail, and then once again, mean reversion back down towards the midpoint, unless we were to get some sort of game-changing catalyst up there at the highs, which I don't really see where that sort of falls in terms of the upcoming things that are known knowns, right? The unknown unknowns are things that we just can't see yet, which is like we talked about in the intro. I don't know what the semiconductor bear catalyst is. If this is going to be a lower high on the daily timescale, so let's put away the bull hat for a second and just take back out the bear hat. If this is going to be a lower high on the daily timescale, then this ultimately needs to continue rejecting the daily 20. We could open over 686, but I wouldn't want to see an opening drive to the downside that starts to put into play some kind of breakdown underneath today's low. That way we're not holding an hourly higher low, right? You do not want, if you're a bear, you do not want this to hold as an hourly higher low. You'd like to see a breakdown there. So a move under 686 that starts to pressure today's low, 684.15, builds out like a 15-minute bear flag. Underneath 684.15, I think the floodgates start to open up back down towards the bottom end of the range, and this will then look like a daily firm lower high, right? And this is important because if this is ultimately a firm lower high in the trend sequence, and the market can see a rotation back down into the low end of the range, what do we know happens there? Well, retesting the same level in short proximity of time after a lower high, this, ding, 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 should increase the odds that the market actually breaks down through the range low. That would help the bear case here if we reattempt the same low after a lower high. The bearish pressure is building, right? The market is not bullish. It is unable to retake the key moving averages, the 50 and the 20 here. If we just break out our anchored view apps intraday, let's just load these up real quick. What we'll see, it's not the volume profile, but rather the intraday anchored view apps. There we are. You'll see that this low anchored view app here is right on the money with today's low. If we take out 684.15, this aligns with the idea that the market should rotate back down towards the lows. A majority of the stack would remain above us. If we open tangled up in the anchored view apps, this is where it's a little bit noisy. And once again, if it's going to be a long, I think you need to clear the stack, clear the daily 20, and get over 689.75 for this rotation to take shape here. That's the bull case, but as we'll see through supporting evidence, I'm not necessarily convinced that we have an overwhelming amount of bullish evidence. So to me, an open in here is very cautious. It's the midpoint of the range. Don't get overcommitted to either side. If we Brigade bolt here, cautiously bullish, cautiously bullish. If we get here, leaning into the short thesis, if we can break and Brigade bolt underneath 684.15, retargeting the bottom end of the range. Just to go back to the daily chart for just a second here, talking about further downside targets, if we really start to take out in a meaningful way 675, 674, the next target is the December low here at 671.25. There's a small inflection point here at 668.50. Then the neckline of this inverted head and shoulders is the next major area of potential support that I'm seeing at 664.25. This is not a bearish call to say that we must go here in the blink of an eye into Friday. I'm just giving you the levels to the downside. Once again, my tone here is neutral between 689.75 and 686. Brigade bolt bullish above very cautiously, if that's the case. If we open under 686, or if we get an opening drive to the downside for bear flag here, underneath today's Wednesday low, the door is back open to the bottom end of the range, primarily targeting the lows at 676.50. Let's get on over to we can go back down to the hourly chart here actually for a second. I want to just throw a Fibonacci on the entire range from the top down to the bottom of the move here, and just point out that once again, look at your 38.2. It's almost too perfect. You can't make this stuff up. Under the 38.2, the odds dramatically increase for the 100% retracement, right? And over the 61.8, the odds dramatically increase for the 100% retracement. So this makes total sense that these two inflection points are almost perfect from a Fibonacci perspective. Let's grab the intraday market internals here. If you're not familiar with the market internals, check out the video tutorial in the top right-hand corner. What do we actually see going on underneath the hood? This is why I'm not all really that bullish. You could see on the Monday session where there was a nice steady grind intraday to the upside, volume flows were technically out. In today's session, volume flows remained up, but take a look at everything else. The advanced decline line closes weak. It was sort of negative to flat on Tuesday. The index score intraday is bullish, and that makes sense, right? The index score is meant for intraday trading, so that's good that it was signaling upside. Look at how it closes today, though. It completely gives back the build into the zero line. If you look at the cumulative build on the tick here, which is different from the index score, of course, very small green on Tuesday and actually closing red into that afternoon rollover here on today's Wednesday session. So at the exchange level, do we have an overwhelming amount of evidence that buyers are stepping up and buying this in a meaningful way? I don't really think so. I mean, the volume flows are there. I will give some credit where credit is due, but that's kind of it. That's the only data point that supports major bull thesis. Everything else is neutral to bearish. If we jump on over to market profile, what do we see here? I want to continue talking about this thin structure above in the single print. So this is the Thursday breakdown from last week. And by the way, if you're not familiar with market profile, video tutorial, the whole 9 yards in the top right-hand corner. These single prints are an area of thin volume that the market should have no problem retracing. And what did the market do today? I mean, yeah, it found value higher, it found a point of control inside those single prints, but did we really see the market scream with momentum? Oh my God, boom, right? Short squeeze is on and this market's ripping to the upside. I'm not going to say that it wasn't a nice, morning move to the top side in the ES, but it really wasn't like a short squeeze, unrelenting bid, oh my God, this thing's going to the moon. Didn't feel that way by any stretch of the imagination. So as the ES comes into these single prints, we're not really seeing that acceleration. And the main takeaway here is just that I want to continue pointing out, shorts don't really appear to be nervous. If you had nervous shorts, you'd get a big A period, post that looks like this and a P-shaped profile up here trying to find value higher if shorts were going to squeeze out through those singles. And it's just not the situation we got at all. It's a fairly evenly distributed situation here today. Lack of trend with the rollover into the afternoon. Value area is slightly higher. Point of control is slightly higher. A little bit of a mechanical shelf up towards the top side. We usually say 45-degree line works best on the low, but 45-degree line from the high just means that longs painted themselves into a corner, got themselves trapped, overly long at the high of the day, and of course we closed slightly lower than that, right? So all the evidence that I'm seeing here, once again, would suggest that if we can come back down into today's range, open underneath the weekly inflection point, just call it here, and then really start to put the pressure on today's low, all of these longs late to the party, which are not just shorts covering, because we saw that based on the single print lack of closure, the pressure's on. Any longs late to the party buying today's high, those people are underwater and likely closing out. We don't have nervous shorts. We probably have nervous longs if this situation starts to unfold, taking out today's low. Right? So going back on over to the platform, I think everything kind of aligns with this kind of idea that longs trapped from here, they get nervous on opening range breakdown or sort of opening drive to the downside bear flag here, 5 and 15, and now all of a sudden this becomes a reality. This anchored VWAP would sort of align with that idea as well, right? Just longs would be feeling like this, and shorts would be feeling like this. It's really that simple with the anchored VWAP from Tuesday's low. With that, let's jump on over to the nasty Nasdaq. Let's see what's going on the QQQ daily timescale here. What do we see from this perspective? The picture is, most certainly different. You can see that we have highs, lower highs, lower highs, and certainly plenty of room for a lower high anywhere underneath 613. Look at the daily bar today. Inverted hammer looks over Friday's high, fails to close above. We looked over Monday's high. Tuesday's high closed above that. We're still well below the 50, well below the 20. All of this is still overhead supply. This is certainly a daily downtrend. You have a lower low here. This is an equal low. This is a lower high, as we said, lower high, and potential for a lower high. So the daily trend is already down on the QQQ. And in my view, this is just a counter trend rally. This is not a substantial rally that really changes the tone of what's happening in the Nasdaq. If it was, you would close strong on the highs. You would start testing this area. You'd be looking for acceptance over 613 into the end of the week. And if that's the case, then I'll change my tone on Thursday and Friday if we find ourselves over 613. But the body of evidence that I'm looking at doesn't really suggest that, and we'll get into this as we continue through today's show. Once again, the argument could be that this is double bottom. If we're over 613, IWCMT, I will change my tone over 613. But for now, what do we see? I mean, just take a look at look no further than what we have here. There is your Wednesday low of last week, rejecting towards the highs of today's session, closing back down in the anchored VWAP stack. And once again, if we start to fail these lows in here, today's low, tomorrow, fail the anchored VWAP, I would just expect a rotation of the lows, equal lows after lower highs, right? What do we say? The odds dramatically increase that you go through the more you can test this in short proximity of time, especially after the lower high. So I think the Bears have, the Bears are getting a soft underhand pitch right over home plate. I know nothing about baseball, but let's just use the analogy anyways. It's like an empty net goal in hockey, right? It's right there. All the Bears have to do is just make sure the puck can cross the center line, nobody's offsides, and boom, just drift it right into the net. No problem, right? That's all the Bears have to do here. Just don't mess it up. Everything is like right there. You just got to make this equal low, keep the lower high, and then the floodgates open up. Now, do semiconductors actually break down? As mentioned in the intro, I don't really see why they would. Huge demand for these things based on the most recent meta headline, right? But that's the situation in the Qs in isolation here. You're probably looking at software to continue being an issue, your Apples of the world, your Microsofts of the world, the hyperscalers, concerns there. That's what keeps the bearish pressure on for this QQQ. Let's quickly hit it with a Fibonacci from the top down to the bottom. Just kind of see what's going on here. 38.2, all of this is just bear flag consolidation, right? So this helps the bear narrative as well. Nothing really compelling there. I'll change my tone if we're above. What else can maybe be said? I mean, nothing really to harp on that I haven't already harped on enough. Underneath this low in here, I think makes perfect sense. Underneath 602.80s, roughly in that area, underneath the anchored VWAP, targeting the low of this range. There it is. Let's jump on over to the NASDAQ side of the market internals. Just kind of check in with what's going on here. Same comment on volume. Same comment here on the rollover versus the weakness on Tuesday. Bearish build, slightly bearish build. It's not enough for me to be overly compelled on the long side. If we jump on over to market profile, we can examine those single prints a little bit more closely. And the main takeaway, once again, is just, we closed this, or actually we didn't even close them all the way. We got a little bit further than what happened on Friday of last week. Here's Friday's attempt. We repair the poor high. I guess there's that. But we rotate through some of the singles, but still can't close them all the way. So once again, like if this market's going to get in gear, if you're going to squeeze shorts, if you're going to put the pressure on and, oh my God, this thing's rip-roaring to the upside, like, come on, where's the squeeze? Where's the panic from the shorts? Where's the buyers stepping in and saying, aha, this is it, right? It was just a big shakeout off the range low, and the Qs are going to be bullish again, and you're just not seeing that. So I'll give credit, yes, point of control slightly higher, but look at where we are right now in the after hours. We're underneath that point of control. I don't know about you, but it smells like overhead supply to me. As long as we stay below that, again, taking out this low in here gets kind of dangerous. I just think more about downside than anything else, right? Poor high at today's session, and let's zoom in a little bit further. Yeah, lack of material excess for sure. F&H period there, lack of material excess. So it could use a little bit of repair, and all that kind of means is if we do open higher, let's just go back over to the Qs. If we open higher in here, you could still rally. You could close the singles all the way. You could reject 613 and still have a lower high. Highs, lower highs, lower highs. Remember, this is the moving average stack. 613 is still technically a lower high. That doesn't do anything to really change the narrative here for the Qs. So I don't want to be more bearish than I have to be. I always, I guess everybody jokes around I'm the permeable of YouTube, and that's great and whatnot. I just read the trend. I don't want to have to be any more bearish than I need to be. And as long as we're under 613, I still technically see a reason to be a bear, right? So that is what we've got in that side of the market, on that side of the market. Let's go on over to small caps, kind of see what's going on over here. I said in the intro that bears have an edge almost everywhere else other than semiconductors. I mean, look no further than your IWM. This had a balance range back over here. Look above and fail, rotated to the bottom end. Consolidation, attempted to break higher again today. Look at the daily close. Horrible. Big upper wick there, rejecting this level, could not sustain a higher low for this, and just closing back inside of the original balance from back here. So I don't really see that as being all that constructive. I think if you take out today's low tomorrow, it's the same as everything else. Range low rotation is the idea. Let's see what happens at the 50. And in this situation, coming in off of a lower high now, and even this as a nuanced lower high, just like in the NQ, just like in the Nasdaq, the odds would increase of an equal low breakdown in short proximity of time after setting a lower high. That's how trends work, right? Lower high, lower low. It's not lower high, equal low, equal low, equal low, equal low. Eventually, you're going to get that lower low. Otherwise, you're just building a perpetual descending triangle, which, it's a descending triangle for a reason. The buyers are getting tired out, and boom, eventually, you got to break down. I shouldn't say you have to. The market never has to do anything, but you get the point. Let's jump on over to the intraday hourly chart for the IWM. We've already got our anchored view app stack and cluster on there. Just in the midpoint, I would say that this is still technically bullish consolidation. You could build the argument for technically hourly higher lows. I don't love that argument. You probably start dealing more so with range compression, something that looks like this, and you have a wedge in small caps, and then you learn something here, and you learn something here. Right? I think that personally, based on the horizontal levels, and my experience with horizontals is that they're much more meaningful than angled or direct trend lines, right? This failure just means that buyers are offsides here, buyers are offsides here. Forget about the trend line. This is buyers are offsides. And if you're in the range, then look above and fail should target the bottom end. So that looks a little bit more bearish to me over on small caps. Let's quickly hit it with a fib. Why not from the top to this low? And we failed the 61.8. So we could not sustain a higher low above. The odds of the 100% retracement are diminished inside the midpoint. We're just in no man's land between the two key spots right there. Let's jump on over to our Russell side of the market internals. What do we have over here? Volume flows were not as good today on the top side for the Russell. Advanced decline line completely rolls over, much more of a bearish build over here. And with a look above and fail, checks out. So again, I don't want to have to be any more bearish than I have to be, but this is kind of what the charts are saying as of right now. Let's get back on over to our Spiders Daily and walk through our sector performance. Leading the pack this week is semiconductors, right? This is why I don't think the market's going to go like this and go to zero. It's because semis are so strong and they remain resilient here. XLK is honestly leading towards the top side, as is the Mag 7 ETF, financials, and discretionary. This is actually more of a risk on rotation towards the top side. The structural charts in there are really the concern. If we look at industrials, they're still green at the bottom end of the barrel. We have utilities, we have staples, we have real estate, bonds, healthcare, and software. So it still looks a little bit more like a risk on rotation in terms of sector performance and the actual percentage change. But take a look at these charts. So SMH is really one of the strongest risk on charts that there are. Everything else looks terrible. If you look at this, you've got your trend line. 50 SMA is right there with it. This is a full 100% retracement. I call this a wall-to-wall move. You've gone from A to B, no pullback in between. You finally pulled back. You set a higher low near the daily 20, and you're already back at the all-time high. So in my view, this is just a classic, there we go. This is just a classic ascending triangle that's building near the highs. Now, yes, inverted hammer on the daily bar doesn't really close strong. It closes fairly weak in the lower third. I get it, but I don't really think that this chart is in dire straits or like in big trouble for, oh my God, it's going to flush and go to zero. If you get a weekly double top, would I start sounding the alarm bell here? Of course, underneath 376. But for now, I'm sort of counting for some opportunity, a higher low here, like an inside day that does this. That would be pretty bullish. Even if you just hold and test Tuesday's low, generally this is still just building out a daily higher low shelf over an upward sloping 50 SMA. Just can't really be bearish on semiconductors. I mean, again, I could see it just like everybody else. If it's going to be a double top, I get it, right? I could see it. I'm right there with you. But you got to get through the neckline and actually bring in a lower low if I'm going to say, wow, that's concerning and my goodness, the market should crash. We just don't have that. So the strength in semiconductors is the glue that's kind of keeping this market together. If we look at the XLK, good sector performance in terms of percentage change, but look at this chart. Horrible, right? Highs, lower highs, lower highs, lower highs, underneath the balance range, underneath the moving average stack. So don't be deceived by the sector posture over here percentage-wise. This, in my view, is just another opportunity for a lower high and continuing the trend to maybe come in, test the 200, test this unfilled gap down here, just continue some pressure at the bottom end of the balance range, which generally is bearish for markets, right? If we go on over to the Mag 7 ETF, got to give some credit where credit is due. Nice bounce that's starting off the daily 200, but that's about where it stops, right? If you look at these prior lows, they're just acting as resistance. I mean, you didn't even make it to the neckline, or the base, if you will, of this rounded top formation. Didn't even make it there. So inverted hammer, I think if you're under that low tomorrow, sayonara, nice knowing you, right? You're going to continue to drift in the downward direction. You have a clear trend change here on Mag 7s, and although, again, the percentage change looks okay, the structural chart does not look okay. If we look at the XLF, once again, counter trend move in the context of a developed downtrend. Here's a bear flag. Here's a high. Here's a lower high. Here's the potential for a lower high underneath previous support. Previous support acts as new resistance. Daily 200 SMA. 20 is crashing down. I just don't see the argument there for a big bullish turnaround. I get it, right? Range low support. I can see that. But for now, the trend is down. We're coming off of the lowest low. There's room for a lower high. That's bearish to me. If we jump on over to XLY, I mean, do I have to repeat myself? It's like highs, lower highs, lower highs, lower highs. I know it's doing well percentage-wise, but like there's nothing here that makes me jump for joy and say, oh my goodness, we're in a clean uptrend and this is the low and this is the bottom. I just don't see that. Like the bare minimum would have to be at least some kind of acceptance here up and over 118.85. And, Tesla doesn't look great for it. Amazon's trying to improve, right? So XLY is not there. XLI Industrials, I'll give some credit where credit is due. Great little bull flag up here. We'll let that be. It's kind of an inside day today. If we go for another leg higher, you're sort of dealing with leg 3. Maybe I wouldn't be all that bearish on industrials there. If you look at materials, this is the lightest weight sector in the market, so it's not like this is going to save the day. But again, I'll give some credit. There's a bull flag. Once again, like what do we know about this stuff? It's so lightweight that it doesn't matter for the S&P 500. This could be rocking in an uptrend, and once again, what's your S&P doing? Absolutely nothing. So it all boils down to what? Semiconductors. Do they break or do they not? If you're trading in these sectors, like if you're trading materials names, then by all means, you're probably doing great. But if you're trading the broad market, if you're using the spiders as a proxy for risk on, risk off, I mean, the XLB means nothing. It's such a lightweight component. Just as a reminder, right? Let's just go back over here. Let's go to the SPY. And I just to show you I'm not crazy, right? The XLB is 1.72% of the S&P 500. It doesn't move the needle. It's like irrelevant, right? So as it performs well, it's just not enough. Same thing with energy, right? It looks great in isolation, but it's just not heavyweight enough. If you could consolidate and Brigade bolt to the top side, fantastic. If you're trading energy names, great. If you're trading the market, it's not so great. If you look at the XLC, more of a heavyweight risk on sector, right? What does this look like? Highs, lower highs, potential for lower highs here. I'll give some credit. I mean, this would be classically a bit more of a potential breakout spot for tomorrow. We'll see what Google and Meta do, but that could be potential thin structure retracement. I would still be looking at a lower high or qualifying this as a lower high underneath the 20 and the 50 there, blue and orange respectively. So even though you might have a little bit of a squeeze set up here for topside, it doesn't do anything to change the trend. If you really want to be neutral, I could say neutral there, but really to me, this is a short-term downtrend. It's going over to utilities, cooling off in a big way. I think this could build out a little bit of a cup and handle up here, and then we figure out what's next for it. Utilities rallying, just a reminder, this is risk off. Right? This big rally in utilities, the big rally that we're about to see in consumer staples, this stuff is not risk on. I'll give the pass to things like energy. It's lightweight sector, but it's not risk off. XLB, it's a lightweight sector, but it's not risk off. Utilities, risk off. That is absolutely risk off. If you go look at something like XLP, this is also risk off. Remember, think wants versus needs. People need XLP. People want XLY. Right? So in a recessionary environment, this is kind of like saying, hey, this is your flight to safety, right? Sure, again, it might be underperforming on the week, but look at the structural chart. It's one of the cleanest trends out there, right? Little bit of a pullback happening on Tuesday. I think you might go lower. I mean, look at the inside inverted hammer today. You take out the 2-day equal low. You could see a date with the daily 20 and see if you could catch a higher low there and continue the trend. Or even if it just goes sideways, like, so be it. This could easily cool off, and it's still going to signal risk off, right? Let's jump on into real estate. Slight downtick today with rates higher, but generally over the top end of the range. I mean, hypothetically bullish for wealth effect, but that's really just for people who actually own equity. Let's jump into TLT. Not much really happening here, just a mild downtick. As we know, rates came up or down, slightly. Let's go on over to the XLV. I think we won't, don't. We don't want to ignore the XLV in this range here. Great hammer today, trying to build out higher lows over the moving average stack. We know this is a weekly cup and handle. If this can break and Brigade bolt the blue sky territories, pay attention to your XLV. Names here, probably in the pharmaceutical space. Drug manufacturers have been a little bit hotter than your insurance names, for example. Like I would avoid UNH and I would look at something like BMY, J&J, Eli Lilly, Teva, those types of things, Pfizer even. IGV, software, still looks like a bear flag H pattern on the lows to me. I think a lot of people are still looking for the big mega bounce on IGV, the big capitulation low. Oh my God, it's in. Worked for a couple days, equal lows now. I'm honestly a bit more of a believer that you need to clean up this low. It's too precise. You need to put in an excess low, make another leg lower, and then see a snapback. So I'm going to be watching 79.65 and primarily Microsoft and Palantir in terms of weightings for IGV. You could also start going down the rabbit hole. You have CRM, Intuit, ServiceNow, the whole crew. Of course, you could just look up the weightings on your own, but those are sort of the top dogs in the space there. So your sector performance, don't be deceived by the percentage change here on the right-hand side. I don't think that there's anything miraculous happening in these charts other than the SMH remaining resilient here near the all-time highs. And again, it's like just apply some classic chart patterning to it. It does look more like an ascending triangle, or you could call it an upward channel, whatever you want to call it in here. That's fine. It looks good. And unless there's an actual catalyst that says, oh my goodness, we're concerned about semis all of a sudden and all this demand is drying up. When I say demand, I'm not saying Meta for NVIDIA. I'm saying demand for Meta's, hyperscaler abilities, data center abilities, Microsoft's abilities, AWS, Azure, Google Cloud, all that stuff. If demand starts drying up over there, it will translate to less capex spent. NVIDIA won't get the dollars, AMD won't get the dollars, and SMH will fall because even the manufacturing side of things, like your ASMLs, your AMAT, Applied Materials of the world, those things will start to fail as well. So unless there's a huge dry up in demand for semis or even just appetite for AI, unless there's concerns about OpenAI and the funding and everybody's going to cut back hard all of a sudden, if that's the situation, then maybe, but I just don't see those headlines. So that's really what we're watching for. Semiconductors they're going to be the canary in the coal mine here. All right, let's jump into some ratio charts. Let's see what's going on from a risk appetite perspective. We'll keep it brief. There's really nothing here that screams risk on. All four of these look concerning underneath 50 SMAs. This is risk off, and this is risk off down here as well. Let's jump on into the A set and see what we've got over here. Nothing looks good except for this one, semiconductors versus healthcare, which would make sense because semis are sort of the lone wolf as of right now. Let's jump into the B set. Nothing really looks good for risk on over here. TLT, as we noted in the weekend video, broke down. That's concerning for risk appetite. The gold ratio continues to drift lower, and Bitcoin does not really look all that great recently. Even on the daily chart, you need a lot of work there to break over the double bottom neckline. Let's go from the Bs over to the dollar and rates. You can see the dollar moving higher. That should be a headwind to equities as rates potentially move slightly higher as well. To me, this is still a counter trend move in the context of this breakdown on rates. I think the market is signaling to us, hey, pay attention to growth, pay attention to labor, like forget about inflation. That's kind of over and done with. Pay attention to these other things. That's what the 10-year rate seems to be suggesting here as it backs off aggressively over the last little bit. I mean, think about how long it took for this market to figure out, okay, we're going slightly higher, and then boom, in a matter of days, it was just like all of that progress, months of grinding sideways, unwound in the TNX, right? So the market's telling us something there. Let's jump on into let's get over here. Yeah, I guess it's just inverted ZT for the 2-year bond over here. Kind of, stable. Too much talking today. It's kind of stable for the bond on the 2-year, which it would, of course, imply to me that there's still probably, 92% odds? Yeah, 92.1% odds for that pause. Let me give this a refresh just to double check in case there was an update after. Yeah, I mean, look at that. 93.6% odds after some of the Fed speak this afternoon that there's going to be no change to the policy rate on the 18th of March, which in my view is a little bit too late. And I think the 10-year, right, I didn't mean to be obscure or sort of like opaque in saying that the 10-year rate is telling us something. What it's telling us is that inflation shouldn't really be the major concern and worry about growth, right? So this is seemingly wrong. The 10-year is shouting that this is the wrong assumption. That's kind of my take here on the Fed Watch tool. All right, let's jump on into the calendar here. As we know, we got the FOMC meeting minutes today. I did not dig through that, but probably something I do later on. Jobless claims here will be coming in tomorrow morning. That's at 8:30, along with some other just ancillary stuff, nothing I'm overly concerned about. At 8:30 on Friday, it is going to be PCE and GDP, and then 9:45 intraday will be manufacturing and services PMI. The flash reads from S&P Global tend to be a little bit more important than the final and the revisions, just like these revisions down here from the University of Michigan probably won't move the market all that much either at the 10 o'clock time frame. It's the preliminaries that always matter most. So that is your economic calendar into the rest of the week. Just pay attention to primarily jobless claims as well as PCE here on Friday, and then this. I'm even a little bit more neutral on the PMIs. Last go around, we sort of, on the finals at least, we got information that yes, we were expanding the economy, right? And you can see this here, 53 and 52.4. As long as those are over 50, that means positive expansion, growth, so to speak, in manufacturing and services. So with that, here's the earnings calendar. What do we have tomorrow morning before the open? Walmart, absolutely. Things have been trading bananas recently. So let's watch Walmart in the pre-market prep tomorrow morning. DE for John Deere, been crazy for industrials. Lemonade has backed off. They had that big day with the Tesla announcement for discounted insurance, but has since backed off meaningfully, losing the daily 50. We'll watch out for that. Open Door has been the meme stock of this current cycle, so we'll see what Eric Jackson has to say about that. The guy who, just was really pumping this thing hard. Eric, we'll see what happens on earnings. And that's really it on the calendar for this week. They always sneak it by. They always sneak it by down here. Do not forget about AXTI for the fiber optics. Please pay attention to that. That's Thursday after the close as well. Caught my eye just before we had to move on. Let's keep going. Let's finish up today's episode on a strong note. Bond relationship in here, saying the same thing as the 10-year, basically saying, hey, pay attention, growth concerns, growth concerns, growth concerns, not so much inflation concerns. If this breakout was going to stick back here into the early fall of last year, that is inflation concerns. This right here, growth concerns, hey, pay attention, moving lower, right? That's why the TNX is moving so rapidly as well. Credit spreads. What do we have on this front? Credit spreads coming in a little bit, helps risk appetite. I wouldn't say that these have changed in a material way over the last couple of sessions. HYG, if you're a bull out there, please hang your hat on this data point. This is really one of the only things, you got the lightweight sectors maybe rallying in a favorable situation, but the HYG is one of the only major data points that I would say really aligns with the bull thesis here. Just notice the equal highs versus the distinct lower high that we have here in the S&P 500. This is telling us that the S&P is a little bit, quote, overcooked to the downside and may actually, drift a little bit higher. So the HYG has not typically led us astray. I think this is something that we should pay attention to. Notice here, right, these higher lows led this bounce here off of the very bottom. That was pretty noteworthy. So I'm not discounting this by any stretch of the imagination, but I even said this in the group today. This is one data point in a weight of the evidence approach that we're taking here versus everything else we've already looked at. So if you're a bull and you just get overly attached to this one data point, I think you're missing the idea of looking through the broad context of the market and you're just getting laser focused on the one thing that proves your thesis. Right, so just understand that on the HYG. Let's jump on over into our breadth charts. Breadth still looks okay. Meaningful uptick over here, sideways on new highs versus lows inside day on the RSP. It is still above this breakout level back here. The QQQE is just in the midpoint of its range. Not much to really write home about on this one. Let's get into our volatility metrics. As you can see on the VIX, still elevated near this 2050, but backing off over the last session or two. And if we go on over to the VVIX, you can see we're also still over 103, but under 120. There we have it, underneath the level. And if I just jump into our vol futures, we could see that we are still technically in a contango. We had a VIXpiration today. If I just jump on over to this tab here, there we go. This G contract expired, so HJ is what we're looking at currently. There's about, 65 cents of contango in the front contracts there. Careful. And then over here, we have our 9 versus 30-day VIX bouncing off the zero line, and VIX 1-day is also over that 1275. So a little bit of concern on volatility, but nothing to the degree where I would say, oh my God, duck and cover, we're not in backwardation. If these start to go negative and print under the zero line, I would start running for the hills and, be a little bit more vocal about, I don't care what you think about this lower high in the midpoint of range. I'm bearish, right? We're just not there yet. Volatility has not inverted, so to speak, on that front. One thing I will just continue to bring up, which has been interesting over the last little bit, is this P call. And of course, we're just kind of interested in this thing as it approaches. It looks like this is the weekly chart. That's why. Let's go to a daily. It has repeatedly hit this one level, and I just don't, like as we said in the weekend video, the market likely doesn't pay out all this insurance. If everybody's hedged, the market's likely not going to crash. And I think that maybe aligns with the SMH. It aligns with the HYG. So if you're, again, looking to be a bull, typically these elevated reads in the P call don't really align with market tops. They align with market bottoms, right? And we know that. You could just, look no further than your April situation. If we just go back over here, everybody's all bared up. Oh my God, put the insurance on. And that's exactly when the low steps up, right? So there's your P call. And skew also, for what it's worth, if I just reset this to the actual skew tells us about out of the money implied volatility on 30-day plus puts. It's low. So nobody's reaching for insurance like 30 days out. Everybody's reaching in for insurance on P-call at least in like the next day or the next 2 days, based on this whole phenomenon of SPX0 DTE, right? So there is that. Let's get back on over to this and let's take a look at NVIDIA. What do we see over here? Okay, so NVIDIA is the top dog semiconductor. I'd be curious to see what happens on the earnings call, but for now, I actually don't really love the daily chart. I think the only thing to say about the daily is just the resiliency in NVIDIA has provided the stability for the S&P 500, right? If this is going to be the big Armageddon head and shoulders that everybody is scared about, right? Well, we just haven't broken the trend line. We are elevated in this range. We're still in the right shoulder. I mean, as NVIDIA just stabilizes in here, it's going to be pretty difficult to build a case for an S&P going to zero, right? This is the top heaviest weight component of the market, and it's just doing nothing, right? It's doing absolutely nothing. So I don't love it. I don't love the daily bar today. I will give credit over the daily 20 and the 50. I just don't know what we do about this daily bar. I don't want to be long into the top of this range and just get immediately slapped. I don't really want to get long here without a generally more bullish tone for the broad market as a whole. I don't really want to short into the moving averages. So be my guest if you see NVIDIA with clarity, but I just personally don't. Maybe it'll act as a proxy for a semiconductor trade if there's something else that's setting up with poor liquidity. If AMD looks good, I mean, that might not even be the best idea, but TSM, if something looks good, that's kind of what I did today on NVIDIA. Maybe that works again, but for now, just in isolation, next. So let's not even waste any more breath on it. Apple, a little bit of an inverted hammer there on the daily chart, rejecting the 20, closing right on the, rejecting the 50, closing on the 20. I could see this being reasonable for a short underneath the low, something that comes in like this. If we just consolidate sideways, I would be interested in the Stevie Wonder, the top side, up and over through that thin structure, 266 up to 271.75 roughly. So on the hourly chart, you can see it here. If we just consolidate, right, a reclaim of the daily 50, thin structure retracement. What goes straight down likely goes straight back up. We're looking at 271.75. There it is. Apple could be interesting. Let's jump on over to Microsoft. Really weak action here in Microsoft. Just could not get anywhere close to the 2-day high over there for a breakout. It's sitting on the low. I don't like Microsoft here. I don't like the prospect of getting short into the lows. If you're already short, then fine. There's nothing wrong with this chart. It's stage 4 at this point underneath the 200, the 50, the 20. They're all fanned out in proper orientation. There's nothing wrong with the downtrend here. I just don't know about new short smack into the low. And it also doesn't really look like a great long, just noting all this relative weakness in here. So on Microsoft, another one, kind of like NVIDIA, where I just kind of say, okay, nothing for me to really do here yet. Patience until the next setup comes around the corner. If I look at Amazon doesn't look half bad. Reason I say that is because there's a partial gap close here. We're back inside of the earnings range, and there's been some degree of momentum to the top side. So if I go on down to the hourly chart, getting a little bit of a bull flag here on the hourly. Let me see if I could just center this on the screen a little bit more easily. There we go. If this is a bull flag, I would maybe participate in that. Or if we could get this, I would participate in the hold over these prior highs if, asterisk, the broad market remains bullish. If the broad market's falling off of a cliff, I'm probably looking at this and then Brigade Bolt here for downside on Amazon. Let's go on over to Google. This is probably a better short in my opinion. I think Google is one of the better shorts just because of the daily structure. It's also like the last man standing. So if it's going to come out of Google as well, then you didn't even rally into this major rejection point, prior support, right? Support's back here. You didn't even rally back into it. And today, just inverted hammer, looked over prior day high, closes weak back inside of the range. So to me, this Google is a great potential trade for either a look above and fail back into range, and then this, or you just do this right out of the gates, or you rally and it's still a short here, right? Something that looks like that. So Google, no matter how you slice it, I really don't want to be long through this rotation. I would prefer to look for the rejection there or look for the rejection here into the low, right? And something that you could use for basically everything on the core list, right? It basically is Mag 7. Use the Mags ETF. Use this. If this is rejecting the overhead supply from this low, and we're just rolling off in here, then great. We're more bearish confidence for the core list, right? Let's go from Google to Broadcom. Broadcom's actually interesting in my view for a long. I know it's got daily inverted hammer here, but look at how on the gap down from not Monday, but Tuesday, sellers could not really run away with it, to or through the 200. There was a small gap fill reversal for maybe 15 minutes, 30 minutes, and then we rallied hard, reclaimed the 20 and closed above. Look at today, using the 20 as support. So I'm still looking for this reversal to start stepping up in Broadcom. I have to acknowledge the daily, 50 rejections up there. That's fine. But on the hourly chart, I just don't think that I want to be a bear here. I think that I more so want to see consolidation here and potential for Brigade Bolt over 336.50 for a retest of the 50 SMA, that is. So something that looks like this is your first long, and then, if we could really build it out, retaking this level becomes much more substantial. Okay, so that is Broadcom in a nutshell. Let's keep going. Metaverse, I'm not fond of. I don't really want to get long into the moving averages. I know the XLC looked okay. I know they had the Catalyst partnership with NVIDIA. I get it. I get, all of it. I could see it, but do I want to be long into the 50 and the 20 and, just overhead supply here? It's not my favorite chart. I think more so sideways, maybe something that's gap fill reversal off of this low for inverted head and shoulders builds it out, but I just don't see it yet. Moving along to Tesla, another one that I'm just kind of frustrated with, and not even, I don't remember the last time I traded Tesla, which is probably a good thing. So frustrating just that there's no setup, and we all know and love to trade Tesla. So it's just not there. Maybe there's some kind of inverted head and inverted hammer, yes, but the inverted head and shoulders is not there yet. So let's put that on ice for a second. Just a rejection of 415.25. I don't. Maybe underneath today's low tomorrow, something that looks like that into this low. That's a possibility at 401. Do I love getting long into the 20? No. It's just another one of these Mag 7s where I'm like, this has been a headache. This has kind of been like wishy-washy. You couldn't hold the higher low above. We're underneath now. Are we going to reject? Is it just going to blast back through? Is it going to frustrate? There's no need to spend the mental effort, right? JP Morgan for financials. Inverted hammer there, rejecting the 50 force field-ish effect on the high of day, closing right at the 20. Looks to me like a lower high. Highs, lower highs in the range. Looking for an equal low over time, and I will change my tone if we can get this back over 318.50. Eyes failing me. Palantir, horrible close. Look at this bar compared to the Qs. All right, look at the QQQ. Inverted hammer, yeah, but just take a look at the Qs, then take a look at this Palantir. Couldn't hold any of the gain. It just completely washed out. The gap could not really do anything meaningful. There was a great momentum break right off the open, but that was about it. So on Palantir, next steps are what? Probably a short underneath these lows back into this range low here. And just like what we had on, what was it? Just like what we had on, was it Microsoft, all those equal lows? IGV has all the equal lows. Yeah. Just like this, maybe needs to repair and do something there. I would say something similar on Palantir. You've got these three equal lows, inverted hammer, lower high under the 20, lower high from here to here. Just kind of looking for that sweep and wash out to 120 as the next phase. So it starts with getting acceptance underneath today's low tomorrow, right? That is sort of the theme of today's episode. Today's low tomorrow needs to be failed. Let's go on over to AMD. AMD doji bar, inside bar, multi-week, multi-month, even at this point, support down here, 196.75. If you could bounce, fine, but I would rather see inverted head and shoulders on the hourly intraday for this to be the trade over 209. Here it is. If I just bring this up. I mean, could you long over the 2-day highs at 204? Yes. Are you longing into the cleanest structure? No. I think it gets more like, inverted man ray even, if you can do that. And then again, your neckline is here for that rotation to 218.85. And that becomes a little bit more meaningful to the top side. Let's go on over to Robinhood and see what the hood has for us. Another really weak bar. Just looks over the inside candle high, completely fails, closes in the midpoint. Hate it. Trendline break probably brings you lower. The one thing to just caution about on this, if I grab a little bit more time, is I want you to remind yourself, I'm reminding myself, that we have a prior left side peak that this is coming into. So do you really want to be short right into that 70? Not really. I would think that a little bit more sideways, bear flag, lower high, a bit more of a meaningful break that sets a weekly lower high and then comes back in. That's where you have increased odds. And also, like Robinhood, yes, it's in a stage 4 downtrend. We should continue to follow the trend until proven otherwise. But I don't think it's going to zero. I still think that the story that Vlad is keying in on about all this wealth transfer to the younger generations and that money's going to land on Robinhood, I think there's some truth in that. So for now, this level, I don't necessarily think I want to be short into it, but the chart pattern itself does not look bullish down here. Let's move from this core list into the additional trade ideas. The first one's on LITE. This is an absolute beast to trade, so please be aware of what you're getting into if you decide to trade this. It's got a 7% 20-day ATR at a price point of about $594. Okay, so you're getting into a beast, but look at this daily inside bar, 3-bar play up here. This is, high tight flag, wink. And for now, the inside bar, if it can Brigade bolt up and out, you're in blue sky territory, right? So really great relative strength, especially on that Tuesday session. Light volume on today's inside consolidation, light up and out of 616.80, rock and roll. If you want something a little bit different, you could go with a CIEN. I'll just bring up some of the other, names in this theme, if you will. CIEN closing at an all-time high. AAOI doesn't look as good at the highs, but look at least how this is an inside bar here, a little bit tighter. AXTI has earnings, but take a look at this as well. Tight inside day today, possibly buyable over today's high into tomorrow, and targeting these equal highs here. Just be mindful on this one, of course, of earnings after the close on Thursday. So if you get involved in it tomorrow, you're just right into earnings, right? So that's AXTI here for those optic spaces. Let's get into the next idea, which is actually Caterpillar short. The Caterpillar short here could go both ways. I would respect the inside bar breakdown possibility to get into the 20. It is easy to borrow on Thinkorswim. It is easy to borrow, and locates are fairly common over on Interactive Brokers. So you could short the shares. The options contracts are not great. I would avoid using options on this, just like LITE. On LITE, I wouldn't use options. I would just use the underlying. So there's two things. If you're comfortable shorting the shares, fine, 20 SMA target, or let the pullback unfold and seek the higher low on a look below and fail of the 20 that then starts to rally back in the upward direction, right? For trend continuation in a major sense. That's Caterpillar. Last but not least, I could go with a couple here actually. Oh, I don't know. I'll give you two. They're a little bit more boring, but MOS, Mosaico over here. The Mosaic inside day over the 20, cup with handle starting to build out. If there's going to be a risk-off rotation back into basic materials, this is, I believe, fertilizer, right? If I'm not mistaken, or just specialty chemicals. So Mosaico here, if there's going to be a rotation and XLB catches a little bit more of a bid as money maybe comes out of semiconductors, out of other stuff into more of this defensive or at least trending names. Let's go back to that XLB for a second. I mean, look at this thing, right? If you see that and you go MOS, now all of a sudden you're like, okay, is this just a higher low over the 20, and can we target something like 31? The ATR is not huge, but 3.4%, not bad. You could look for that move there over today's high tomorrow into 31, daily 200 SMA. The next one, I'll just sort of leave you off with this one as well. This is RTX. Raytheon, of course, a little bit of a slower mover, just a classic, but look at these equal highs. There's, of course, chitter chatter going on with all of the coordinated practicing drills in the Straits of Hormuz, if you will, between Iran, Russia, and China. I don't know about you, but that kind of sounds like just ripe for a headline to come out any moment now, and maybe Raytheon's the place to be. So you've got yourself, you could go look at General Dynamics, you could go look at L3 Harris, you could look at Lockheed Martin, you could look at any of these defensives, but take a look at RTX's daily chart, 205.65, blue skies above, nice higher low coming into it over the moving average stack, just saying. So I'll leave it at that in today's episode and installation of the Midweek Market Update. If you enjoyed the video or learned anything new, let me know down below in the comments section or by giving the video a very simple thumbs up. With that said, we're live every morning at 8 o'clock Eastern Time, and tomorrow is no exception. We will be doing the pre-market prep as always tomorrow, 8 o'clock Eastern Time. I hope to see you up in the office. With that said, have yourself a green and fantastic rest of the trading week, and as always, I will see you in the next one.